Thanks, Paul. And thank you for coming down and listening to the story. And g'day Gold Coast and the online viewers. We've done Resource Rising Stars over the last few years, and there's been some changes and some successes with milestones in the company, and there's also been a little bit of setback in the last sort of 12 months, and I'll go through that shortly. But I guess what we have had in terms of stability in our business has been at our board level and also with our management team. We've got a long and strong history on that board and on the management team. And also in our shareholder base, our top shareholders have been pretty well glued to the company for quite a while. We've got Northern Star as our main cornerstone shareholder, and we've also got the Region Pacific Group, who have been around from day one. Directors and management have a good stake in the company, as well as the Precision Opportunity Fund, which is a fund based out of Perth. It's roughly around sort of low 50% in the top 20. Our project, our main project, is a Sulphur Springs project, our only project now. It's located in the Pilbara. It's about 150 k's south of Port Hedland. It's pretty easy access. You go straight down to the Marble Bar Road, down the Marble Bar Road, and then there's a haul road from that blacktop into the old Abydos iron ore mine and the iron ore camp there, or the Abydos camp. Our project is on the haul road, about halfway between Marble Bar Road and the camp. Obviously, the Pilbara is a Tier 1 district. Around us, we've got several operating mines at the moment. We've got the Abydos infrastructure in place, which is around 10 kilometres away from our mine site. Venturex is an ASX-listed copper developer, and we also have a fairly strong exploration portfolio as well. What's unique about us currently is that we're fairly well ready to go. We've spent the last couple of years getting our project approved. We've just recently received that approval, and we're now putting the pieces together to be able to get the project development ready sort of in the middle of next year. It's a high-grade base metals project. We have a fairly equal distribution of copper and zinc. It's a 1.4% copper grade and a 3.6% zinc grade. If you put that into copper equivalent, it's around 3.5% copper. So it does produce a very profitable revenue stream. In 2018, in October, we released our DFS. It's a little bit dated now. We have been updating parts of that DFS, and I'll run through the main changes to that and also give you a flavour for the economics of the project. We haven't put it into print because we are making some changes, and the ASX are a bit sensitive about putting financial numbers out that haven't been fully reviewed by all of our consultants, so I'll run through that verbally as we go. Our main approval was received this year in May. That was the ministerial approval for the EPA. We've been working on that for a number of years. It was a long process, and having received that now, it's sort of opened the floodgates now for the company to move forward quite rapidly and secure the secondary approvals and move towards a development point. We've always, for quite a while now, we've had a mining agreement in place with our traditional owners, so that native title is done. And the initial mine life that we're expecting is around 10 years. We're producing 2 concentrates of the copper and zinc. The company, not just us, but previous owners, but we've spent about 100 million on the project getting it to this point. It's fair to say it's been studied to death. There's not a lot more we can do to it. It's technically sound. The upfront capital required to get us operational is around 215 million. We reviewed our sort of pre-production capital earlier this year, and we've added some additional capital to that to the tune of about $40 million. So that 215 is now the number. That's what we need. And additionally, just to add a bit more sort of upside flavour to the project, there's quite a lot of exploration upside, which is still to be tapped into, and I'll go through that as we move through the preso. But I thought I'd just start with an overview of what the copper price has done since we bought the project. A lot of people have sort of said to me that you've had this project now for nearly 10 years. Why haven't you built it? I think this tells the story. We acquired the project in 2011, and you can see where the copper price was at around $4.20 to $40. Our initial plans were to go straight into production with a strong copper price and a mining inventory that supported at the time around an 8 to 9 year mine life. We went straight into a BFS. And we released that BFS at the end of 2012. You can see the copper price was sort of slowly sort of heading down. From 2012 to 2014, we were waiting for our approval for an underground mine development. At that point, we hadn't introduced the open pit. But again, you can see the trend of the copper price was sinking. So it was very difficult, having received that initial approval in 2014, to obtain finance. I mean, you can see where the copper price was going. By that stage, it was under $3 and heading south at a rate of knots. 2016 to 2017 was sort of like the base of the cycle. In that period, we did quite a lot of work on the resources, and we've updated our resource model. We did some engineering work and some reconfiguring of the mine to be able to develop this project via an open pit. So we did a value engineering study which we released in 2017, which had the open pit as a starter pit going into the underground mine. The underground mine had already been done, it had been BFS'd, it had been approved. So we had this new concept of an open pit on top of it, which required us going back to the authorities and getting a change in our approvals, or an upgrade in our approvals. Now that process, that discussion started in 2017 and concluded in May this year. It's 3 years. And in that 3 year period, we really couldn't get finance until we had the confirmation that we were going to get the approval. So here we are. We have the DFS. We also have a ministerial approval which we've received, and copper prices collapsed at the beginning of the year because of COVID, and now we're back on the way up again. So I think from Venturex's perspective, it's been a pretty choppy last few years, but I think now we're sort of sitting at the bottom of a new cycle with an approved mine ready to go. So it's a good point to be getting on board. Just an overview of the project itself. The mining methodology, well, it's an open pit mine for the first 5 years. We go underground for 5 years. The strategy for processing it is it's pretty conventional. It's 1.25 million tonnes per annum. It's a simple crush, grind and float process. The production profile, this is the average over the 10-year life of the mine, is 15,000 tonnes of copper, that's copper in concentrate, and 35 tonnes of zinc in concentrate. And just to give you an idea, in today's market, that's roughly around $270 million in revenue a year. Or we do our costing in tonnes, it's $213 a tonne. Our all-in sustaining cost to produce that is $148. So we're on a margin of around $65 a tonne, that's Aussie dollars, or $80 million a year. So the project in today's market would generate just over $800 million in EBITDA over the life of the mine. In Nick's booklet here in the company profile, he's got some numbers from our DFS, relatively unchanged. The MPV at the moment, sort of pre-tax, is around the $500 million mark. Post-tax is sort of 330, and the IRR is 51%. So economically, it's a fairly robust project, and given the current metal inventory that we see down there at the bottom of the slide, we've got open pit at Sulphur Springs, we've got underground at Sulphur Springs, and then we move to a project which is only 6 kilometres away, or a resource that's another 6 kilometres away, called Kangaroo Cave. So it's very sort of close to the central processing area. As well as sort of obviously providing some strong financials for our shareholders, there are a lot of social and public benefits to having this project built. In terms of the commodity relevance, I mean, I think we all understand how valuable copper is. It's a fairly stable in demand commodity. It's pretty much in everything. Looking forward, it's going to be a very important commodity in EVs, renewable energy, and etc. Over the next medium term. So we're in the right commodity. From an employment perspective, the project will, when it's at a stable state, will be employing about 300 full-time people. Ramping up will be slightly higher than that at 450. There's obviously opportunities for Indigenous employment, and we do have an agreement with our traditional owners which covers those opportunities off. So we do have a good arrangement or a good engagement with these traditional owners at the moment. Taxes and royalties for the government, $750 million over the first 10 years. It's a pretty significant contribution for a project like ours. Expenditure throughout the project of the $1.5 billion, most of that will be going to businesses in Western Australia, so it's good for the region. Project life at the moment is 10 years, but there's every chance that we'll be able to push that out to much longer, into the 30 to 40, with a lot of exploration upside to go through. Just an update on where we've been and where we're at now. Over the last 12 months, as I said, we had some delays through the process with obtaining the primary EPA ministerial approval. On that picture, when we originally submitted our environmental review document, we were originally proposing to put a tailings storage facility to the right-hand side of that picture, to the far right. Very robust, stable design. It's building TSF these days is not an issue, but where it was placed was creating some drama at the EPA, because it was in a catchment area called the Minerici Creek catchment area, and there was a concern that in 100, 500, 1,000 years' time, post-closure of the mine, that any seepage from the TSF, and this is seepage that leaking from below the TSF over time, may sort of get into the water system and cause some contamination in the water system. Despite our sort of best efforts to design our TSF to avoid all of that, we couldn't provide an in perpetuity guarantee, so we came up with a new concept to move that TSF across to just south of the open pit. It's far enough away from the open pit, so there's no safety issues, but should it seep at some point in the future, it actually does report to the pit lake. So it sort of closes out any sort of environmental issues that the EPA had, and that was enough to completely change the scenario with them, and we got our approval pushed through fairly quickly, and we made that decision late last year, so roughly 12 months ago. In doing that and making that relocation, we had to sort of dodge a few conservation plant species, and mainly the Pterodia marble bar, which are those yellow dots that you can see there. There's not many there, but you can't touch them. So we managed to squeeze the new TSF in between. That's in a valley, So it's very well sort of suited to what we want it for, and everyone's happy. So the approval's now in place and we're going forward. Having done that and made that change, we did have to go back to the site with our traditional owners and do a whole new heritage survey over that new location. Now, we conducted that in August this year. That's been done, and there's no issues that have come out of that. So we're now pretty watertight on that whole area. Just continuing on the update, now that we have that primary approval, there's a round of secondary approvals that we need to secure to be able to construct the project. So there's several mining proposals. There's a Part 5 works approval, and we're progressing through those at the moment. In terms of site infrastructure, one of those mining proposals we've just had recently approved for the construction of the site access road. So from the Abydos Hall Road into our proposed processing site, mine site, it's about 7 kilometres. It crosses the creek. It's an area that's prone to flooding. Don't want the road to wash away, so it's a fairly robust road that needs to go through there, and we had to get a separate approval for that, which we've just received. We can construct that road now at any time. That's a critical path for the construction of the plant and infrastructure, so the road will need to go in early next year, first half of next year, before we can think about getting onto site and putting the project together. There's also planning going on in terms of accommodation camps, related infrastructure, as in site infrastructure, communications, that sort of stuff. We're just planning at the moment. From an engineering point of view, the project's been engineered to a degree by Locopodiums. They did the DFS for us. We're just fine-tuning that at the moment. We're getting a feed study ready to put out to several groups just to update that, and also that will flow into EPC tender documentation and the EPC tender, which we'll conduct early next year. We have a mining proposal in place already for a processing plant, which is just getting amended. We've had discussions around financing now for quite a while. It was red hot around the middle of last year when we were close to getting what we thought was the approval. Then we hit a delay. So we had to reboot our financing discussions after the last approval, when we did get the approval in May. But just to refresh what we've put out in the middle of last year, we secured cornerstone financing from the Trafigura Group, who are a large commodity trading house. They conducted a significant amount of DD on the project. They obviously want the copper and the zinc. They've provided up to 100 million Australian dollars for us to use at construction. And there are other groups that we're currently talking to be able to blend a financing package together for 100% of the debt. A lot of interest from traders in the product, so we haven't locked anything down at the moment. The one commitment we have is with the Toho Group for the 50% of the zinc which we produce, and that was an agreement that we had when we bought the project. There are other groups that we're talking to in terms of equity financing for the project. Venturex has a fairly tight register. It's not able to buy big chunks of equity on the market, but we have groups that are looking to potentially help us finance the project or even develop the project. So there's some interesting discussions underway. I'm not saying we'll do anything, but we certainly have the talk. Now, the exploration I'll move on to next, but we're currently drilling now. We're wrapping up our final drill hole now as we speak. Before I just move on to that program, I just wanted to highlight the fact that the Sulphur Springs deposit, the main ore body which supports the 10-year mine life, it's a VMS deposit. There's 13.8, just under 14 million tonnes of ore in those two lenses, and it's only down to around 500 metres in depth. Now, typically these deposits can go a lot deeper. It's only drilled quite sparsely outside of that existing resource. And the reason for that is that it's a very challenging terrain. The resource lies under a range of very steep hills. They drop away into quite deep ravines. Getting drill rig access can be very problematic. Some areas can't be accessed at all, so you can see that there's it's gappy in some parts of the resource where it's just impossible to be able to get the angles to continue to drill in the areas that you want to. So our company hasn't committed to spend a lot of money to put access into all of these areas and have the perfect drill pads to be able to just drill till the cows come home. There's enough information in the current resource to be able to support a 10-year mine. Once you're mining, or even before you're mining, once you've done the pre-strip, it's nice and flat. You can drive on there. You can get all the angles and all the points that you want. It's something that we will do as we progress through the development of the project. But I just wanted to highlight the fact that globally, even within Australia, that's a sort of a neat little size, but it can certainly grow. And that's just our view of where it can go to. There's nothing below the existing ore body, so there's no drilling in the deeper section of the ore body. That's completely open. Out to the flanks is open as well. Interesting for us is that we did an airborne EM survey in 2017, and to the left and the right of the ore body you can see XA5 and XA6. They're large EM targets. They just glow on either side of the ore body and they stick out as high priority drilling targets. They haven't been drilled, and again it's because of the access for the rig. So there will be an opportunity to do that hopefully next year when we start to move around the project and put better access in with a new road and access roads and that sort of stuff when we do have equipment on the ground, and that'll be a priority for us. Just in terms of other exploration, I just put this up, and it's not something I really want to spend a lot of time on, but just if you want to look at it later, this is sort of how VMS resources develop. And what I just wanted to sort of point out was that there are VMS resources around the world that are huge, and the VMS resources in Australia that are bigger than us. But typically you could get something in the 100+ million tonne range if you're into a big VMS system. Now, there's a picture of us in the green box down the bottom. The two red dots on the top are Sulphur Springs and Kangaroo Caves. The other systems are just around the world, in Canada and Japan, showing that there is multiple pods of mineralisation that occur on trend with VMS deposits. So for us, having an exploration package or having a tenement package from top to bottom of that kidney on the right-hand side is about 27 kilometres. Now we've got two known resources at the top, which define the top half of the belt, and then we've got targets at the bottom there, 4 or 5 targets that are fairly lightly tested. And just to further expand on that, 20 kilometres out from Sulphur Springs, so within that bullseye, and all will be close to the processing centre. Towards the bottom there, we've got Breakers, Man of War, Jamisons, and Anomaly 45. Now these are VMS targets that were drilled maybe 20 years ago, maybe longer. They were lightly drilled by previous owners. We've put some intersections there that show you that even with the sort of minimal drilling they've turned up pretty good numbers. So there's smoke down there. We're currently drilling at Breakers and following up some drilling we did last year, and we've got some good grade there. We had 18 metres at 7.7% zinc. We drilled that straight under a Gossan. We're following that up right now. Like I said, we're finishing our last drill hole today. The geologists are fairly positive on the drilling they've done so far, and we'll be able to sort of speak more to that in a few weeks' time when we get the assays back. But I guess having the development right in the middle and having the opportunity to follow these other exploration targets up gives us that confidence that Sulphur Springs could be around for a long time. I won't go too much into this, but this is just what we're currently following up on down at Breakers. Those are the EM targets which we flew in 2017. There's another 10 targets there around Sulphur Springs to be followed up as well. It's an exploration, candy box. So just to sum up, in terms of Venturex, we've got the copper thematic. Copper is going to be a key commodity in the next few years, and I think we can all understand why. I mean, there's going to be a post-COVID rebuild globally. EV and renewable energy sucks up a huge amount of copper, and diminishing supply. There are no new mines. The big mines are running out of copper. Head grades are coming down. There haven't been any sort of notable discoveries in the last sort of 10 years. Sulphur Springs right now is development ready. We were saying that last year and the year before, but we were delayed and delayed. Right now, we're development ready. We will be the next Australian greenfields copper and zinc development. Tier 1 jurisdiction, DFS is done, ministerial approval, got it. High value production, high value project. That can get bigger, the belt scale is there, and I think in terms of Australia, it's a very unique package that you can build a mine and you can continue to drill it out and make it bigger over the next sort of 10 to 20 years. That's it. Thank you.